What is going on, guys? Tempo Trades here. In today's video, we have a much requested video. We're going to be going over SMT and why it's one of the main confluences I use in my trading. Let's get into it. All right, guys. So in today's video, we are going to be going over 3 examples of SMT. And again, it is one of the 3 major confluences I use. I will never take a trade just because there's an SMT, but when I have a liquidity sweep and I have a draw on liquidity that I want to target and I see an SMT, that just gives me more confidence that the trade is going to work out. So let's just start off by saying, what is an SMT? Okay, now an SMT really is a divergence between the 2 indices. Okay, I use NQ and ES. Some people will throw YM in there. I personally do not check YM, but you can do that if you want to. So essentially, SMT is when we have major swing points, right? That you see major swing highs and major swing lows. And the idea is that ES is going to follow NQ. If ES goes up, NQ is going to go up, vice versa. And when you have these little divergences, it can give you a hint that the market is going to make a move in a certain direction, right? It's kind of like an indicator, the best way to explain it is really a hint. It's giving you clues on what the market is going to do. So for our first example here, like you can see, we have 307, or we can even go to 310 when it happened right here. Yeah. So we have like the 310 1-minute candle, 310 ES 1-minute candle, right? Then you go down here, 347, 347. Okay, so this is the same area on ES and NQ. Now, if you'll notice, NQ came down, took out this swing point right here, and created a new low, whereas ES did not. The same exact time and price, ES did not make a new low, or a lower low in this case, but NQ did, right? So now, if you pair that with a liquidity sweep, if you pair that with a bullish bias, let's say on this day, you know, maybe this was a London high, or this was a high a day, or this was a really strong area that I wanted to target, you can really pair that SMT with the direction and your bias, right? So then, as you could see here, how this played out, the SMT forms right here. The SMT will hold until ES comes down and takes this low, right? So as long as this low is protected on ES, there will always just be a bullish SMT there. So again, here's an obvious 1-minute fair value gap. If you were to take it, you would enter here. A stop would be a full candle close underneath. You never got the candle close. And as you can see here, this trade ended up going, 37 points in profit. So that is the first example of a bullish SMT. And let's go on to the next one. So I had to throw in a bearish example for you guys. So as you can see here on July 18th, NQ 1010, ES 1010, and then you pair it up with 1017. So ES took out this high, NQ did not take out this high. Now, this is a specific situation because I checked the 1 and I checked the 30-second, and I really didn't see any bullish gaps that I can inverse down. So at that point, even though NQ is the weaker pair, I would have to be forced to go over to ES. And as you can see, there's a clear 30-second gap. If you took it, this would have delivered you about 5 points before going back to break even. And if you didn't go to break even, you made a shit ton of money. So again, this works both ways. This can work for the upside. It can work for the downside, and it's why it's one of my favorite confluences. All right, so in the first example, you guys kind of saw how I used SMT for swing points, right? Highs and lows, and there's big SMTs and there's small SMTs. Now this right here would be a really significant SMT. Okay, if you see here, ES came down and took out the London low. This red line right here is from my indicator. This means the London low. And as you could see, NQ did not take out the London low. So instead of a swing point, now we're just talking about huge overnight areas. And this is a really big SMT. So again, you would be able to say, okay, if I'm bullish bias, I see this SMT, NQ is the stronger pair right now because it never took out this low while ES did. You would wait for a 1-minute inverse, 30-second inverse, 2 to 3 minute inverse, and as long as you have a strong draw on liquidity in the other direction, you have a really good chance of coming out that trade green. So I just wanted to show you that not only can the SMT work with swing points, but it can also work with huge areas. It can work with high of day and low of day. It can work with London high and London low. So that's something to look out for. All right, guys, and for our final example of the day, as you can see, this is another bullish SMT example, right? We have 143, 143, and then you pair it up with the other low, which is 248 to 248, you can see that ES swept the low. NQ did not sweep that same low, which would mean NQ is the stronger pair. Now, if you pair that with a bullish bias and a strong draw, you would take this 1 minute inversion right here, right? A close would be under the gap. Personally, I would probably go break even here. That's the first obvious internal high. So that would be my break even. I like this right here for the first TP, these relative highs. And then your final TP would be out here, which did end up hitting. So again, it's just a really strong confluence. I'm going to go over the other ones in future videos, but you can see that when you have a bias and you combine SMT with a sweep and good movement and an inversion, you're going to do well in these markets, man. So leave a comment. Let me know what you think about this, guys. Let me know what you want to see next. So until next time, guys. Peace.